welcome back, traders and investors. We have Sheldon McIntyre on the line here from Chile. Sheldon is the founder and head trader at 360 Virtual Advisor. He began his career in 1996 as investment operations manager, headquartered in Chile. According to Joe, you missed the earthquake, huh?
Yes, I did, thankfully. I lived through the big earthquake in 2010, and to be honest, that was enough for me.
Okay, and how did you end up in Chile?
I came down here on a one-year contract through the Canadian government to work on education. And then after the contract ended, I decided to stay here.
Oh, okay. All right. Tell us about your 360 virtual advisor. Like, how long has it been around?
Well, I started up mainly for Chilean individuals who had been asking me for advice, and I basically started in June 2011. So it's been around for about two and a half, going 2 and 3/4 years now.
Okay, and it kind of has been a good run in the market. How have your returns been?
As of the end of December, I haven't finished up the numbers for the first quarters here, but as of December 31st, 2013, it was up 194%.
Okay. Well, you can't sneeze at that, correct?
No, well, 2013 was a very good year for the service. It was up 89%. So,
Okay. All right. So you said you started it for some Chilean people that were looking for advice. Are
yeah,
you?
friends, family, their people they knew, etc. And then I opened it up for a while for international clients. And then I kind of was using that as a first test, see how it works, see if there was interest. And now we're should be finished up with the second version and releasing at the end of April here. So
Okay, so do you customize it for each client, or do you have like a general program that?
no, it's a general program. I'm not looking to educate anybody. It's strictly my insight into the markets and actionable trade ideas. That's it. I'm not trying to customize anything for anyone. I
Okay,
don't have the time. I'm a trader first. So
okay, good. Okay, and so there's a flat cost for everyone then to for the 360 virtual advisor.
yeah, 75. And actually, when I release the second version, I'm going to make it performance scaled, meaning that I may start with a little bit lower cost on the second version, and I'm going to set up a benchmark. And if the pole position portfolio exceeds my target, not just the S&P, I'm obviously looking for absolute return. It will double in cost every year until it reaches $500
Okay, so it's 75 per month right now.
right now. Yes.
Okay. Do you need a specific amount of capital to utilize your system, or I mean, is it just up to the individual?
Not really. I wouldn't say there's a specific amount. I think that probably 50K is a better way to take advantage of it, but not
Okay.
everyone has that amount of money. So
Okay, but that's recommended. Okay, and so how many in that with that kind of money, how many positions do you usually have on in the market?
I will a full. Usually, I run a 10% position, so obviously a fully invest is 10, but I will take it up on margin if the markets are in the condition. I'm not. It doesn't mean that clients need to do that, but I will go up to 15 positions.
Okay, all right. So tell us about your investment process. I mean, what are starting with your time frame for trades?
Time frame wise, I basically, I trade off daily charts. Usually, I guess you could call me a swing trader. It obviously depends on the state of the market, but I'm looking at, depending on the month. Last month, for example, the average holding period was 8 days
Okay.
for trades. January was 12 days, and then going into last year, there was days where it was up to 20, 25 days. So
Depending on if the trade's going your way or not, you just trying
yeah,
to.
I mean the market. You got to be flexible, right? You can't press trades, set a a fixed time duration, and that's the way it is. You got to get, take what the market gives you. So
Okay, and any day trading?
I do a little bit, but I don't advise it through the service.
Good. Okay,
I do it personally. I
and
will I will trade around positions occasionally.
okay, and is there and this is just in equities? Do you do anything in the futures markets?
No, I straight up equities.
Okay,
But I do look at the, ETFs that'll look at commodities, look at currencies,
just to get
etc.
a macro view. Okay, and typical risk reward ratios on trades. Is it more? I mean, you're kind of standard 2 to 1, or what is your risk reward ratios?
Batting average since the beginning of the service has been running at 52%,
Okay, okay,
and average gain versus average loss has been running at 2.82.
okay. All right. Do you scale in and out of your positions, or are you just kind of like all in and all out? You pick a price and you get in, and or do you give a range, like let's say buy Microsoft between 40 and 40.20. How do you do it? Do you go all in, or do you scale in and out of positions?
Well, depends what where within the base I'm buying. If I'm buying earlier, I'm cheating. For example, maybe a stock that's finding support off the 10-week simple moving average, I'll go half early, and I'll see if the stock can continue to bounce off there, and then I will take add the second half of the position on a as it trades out of the base. But generally, if a few stocks off the lows, I call them pilot positions. You take a half position, see how they work, and add on them. But once I get confirmation through those few pilot positions, I'm all in or all out after that.
Okay, so you look to buy at the base, and then if it goes your way, you add, or if you buy at the base and then it breaks the base down, to the downside, you
Well,
you
for
add it.
example, if a stock pulls down to the 10-week simple moving average,
You got
and
something that
it
we could you got a chart or something that currently you're looking at, so we could get a little better idea of what you're talking about?
sure, if you take a look at a MEOH is a stock that I actually took a position in yesterday, a half position. You'll see on the weekly chart there.
MEOH.
Correct.
Okay, I'm kind of. That one is. Oh, yeah. Okay, go ahead. Okay, I
You
got it.
see how it pulled back last week and closed just under the 10-week simple moving average there. And you'll
Hmm.
see how it off Monday it went underneath and then reversed and actually put in a bullish engulfing week. I took a half position on that yesterday as it traded at 66.59.
Okay.
Now, I'm gonna stick with that as a pilot position on that, and if it continues to go, I will add at 73.53, which was the high back in March.
Okay, so you're looking for this thing to exceed that recent high of the move.
Yeah.
Okay, so do you go with soft stops, or could you kind of go with hard stops, like in something
No,
like this?
well, it's a little bit of both, right? I mean, I have a lot of experience, so I'm allowed a little bit more flexibility, but I'm a hard stop at 7% down.
Okay.
Okay, many times I don't like the price action, and you develop that instinctive ability where you will take it off at -2, -3%. You know, but my hard stop on the downside 7. On the upside, I establish soft targets, but really the price and volume action post breakout dictate to me what rules that I will narrow in on in terms of taking profit.
Okay, kind of going back to your general philosophy here. DJ's asking, what metrics are you screening on for a stock or for an ETF? And I guess this is kind of getting into your whole method of technical analysis.
Well, in terms of, I blend technical with fundamental. I don't do a lot of fundamental research per se on a trade candidate. I will, now with screening platforms, you're able to really integrate almost any type of financial condition you want to look for. So I don't really spend too much time on that initially. And then, of course, I'm looking for stocks that are in an uptrend. I'm looking for a stock that has a 200-day or 200-day moving average up at least 6 months, preferably above the 50-day. I'm looking for a high RS rating based on Market Smith, usually at least 80, unless I'm looking at a turnaround situation. And then once a stock, if a stock breaks out, has a really solid move, let's say 20+% in 10 to 15 days, then I will begin to delve more into the fundamentals itself.
to see if it could sustain the move. Okay.
Yeah, I mean, I don't really want to spend too much time on a stock at the very beginning until it proves itself price wise.
Okay. So, do you recommend short trades as well as long trades?
Yes,
Okay.
but
Uh,
obviously the trend of the market, you know, dictates which the majority of the trades are. Obviously, in this current conditions, most of the trades are long, but I do recommend shorts. Absolutely, I do not believe in, or I don't support the thesis that you go long and if the market's not good, you go cash.
okay. Good. Okay.
I'm not sure how many, if you take a look at, we've had some pretty big declines here. I don't know how people really make a living if they don't do any shorting at all. In a major market decline that lasts several years. So
Right. So you gotta be able to.
I prefer to short the emerging market stocks and ETFs if they're available. They're a lot less covered than, let's say, U.S. stocks,
Yeah.
so you're able to avoid that analyst issue that sometimes can derail a short position. They don't get the coverage, so you can
Yeah.
kind of sneak into them. And usually, when global markets are in a negative state or a nervous state, emerging markets tend to see, hyper capital flight, and that's where I tend to focus my shorts.
Yeah, you don't let those analysts get in your way. No, that's an excellent point. So if you're, obviously the market's been going up, and the balance of your portfolio is long. Do you have any kind of hedging tactics that you employ for the overall portfolio? Maybe short spiders or the S&Ps or something, or are you just playing the stocks flat out for the positions that you have?
Well, I'm basically waiting is my hedge, in the sense that if I don't like what I'm seeing, for example, now I know that at least a few of the major equity indexes are printing new highs. I'm not even close to 100% invested at this point. I find issues with the market this time, and I've got about 50% cash, and that's my hedge. You know,
Okay. For people that your service, people that are looking, to manage their portfolio, long term, or people that are looking to, create some extra income with some swing trading? Really, who's your best client?
professional trader full time, I would say, who's looking to trade on shorter durations in the 8 to 20 day range in terms of holding periods, momentum stocks generally, some global macro trades, whether it's in a commodity or that. But I don't pigeonhole people. It's kind of a flexible service. You take what you
Okay.
want. You use what you want. If you want to follow the pole position model portfolio, okay, that's what you're going to be getting momentum stocks that are liquid, that have a decent market cap. We don't day trade. I don't touch penny stocks or really any stocks below $10. Um, I don't touch stocks that have floats generally below 20 million shares.
Okay.
Usually they're much higher. This is not, how would you say, get rich quick type of thing. And it's more for me. I'm not trying to make lots of money off this. I want to actually see if I can do this well and turn a good service. So I'm not interested in quick dollar type of trading situations.
Okay, good. Okay. And just to close things out here, we have a lot of novice investors in the chat room, and some novice traders. What's the best piece of advice you could give them if they're going to get involved and maybe not necessarily using your service, but if they want to get involved in trading the markets?
Well, in answering that, taking it from, let's say, a benchmark of someone who wants to become a full-time trader,
Yeah.
a professional trader, I think that really you have to be realistic about what you can do for the next 12 to 24 months. I think that, no matter how intelligent you are or your educational background, everybody starts at the same place in this business. Until you put your first trade or trades on, you really don't know what it's all about, and you don't know how you are in that environment. So I would say be realistic and be patient, you know. And also, something that maybe doesn't relate too much to yourself per se, an individual trader, but really be cautious with Twitter and those types of social mediums. They can become dangerous. Um, and I personally think that you could end up doing a lot of damage to your account very quickly if you get too attached to social media and what's being said and what's recommended, etc.
Okay.
Have a
Oh,
strong filter.
yeah, that's good. That's good. That's good advice for traders. Okay, we've had on Sheldon McIntyre, professional trader, founder and head trader at 360 Virtual Advisor. You can check out that site. Well, Sheldon, thanks for your outlook on the market and your advice for traders. Thanks for coming on. We hope to have you on again.
I appreciate it. Have a good day.
Okay, thanks, Sheldon.